Hey guys, Candlesticks here. Welcome back to another weekend trading edge video. If you guys are brand new, I'm a Forex trader. I'm a trading coach over at tier1trading.com. And this is a video that I do on YouTube every weekend, or at least I try to do it every weekend, showing you the top 3 trading ideas that are on my radar for the week to come, and also giving you a lesson that will help push you forward on that path to becoming a consistently profitable trader. If you haven't done so already, make sure you hit that subscribe button. That's the best way you can support this channel. I've been doing these free videos for a decade now, almost. Gosh, and your support is massive. So keep it up. We reached 50,000 subscribers at the beginning of the year. I don't know what the next goal is, but I need you to keep subscribing and sharing so that I can hit it. Now, in today's video, we're going to keep things on the shorter side because I've got a busy weekend planned, so I can't spend too much time on the video. But I want to do 2 things. I want to update you on my trading. I want to talk a little bit about the market environment. And of course, I want to show you some trading opportunities. I actually want to share with you a nice comment as well. But trading in February was slower for me. If you guys remember in the January video, I showed you my results and all that fun stuff. I took about half the amount of trades in February than I did in January. Now, there are some obvious reasons for that. One, or the main one, being the war that is going on, and me deeming this a condition for really 3 out of the last 4 weeks, or 2 out of the last 3 weeks, I should say, deeming it a condition where I don't want to have any exposure to the market because of the uncertainty. And that brought up an excellent question during the week, where it was, Akil, this can count as a fundamental news event, I guess. How do we handle fundamental news events, right? Because we have the daily ones that come on your chart, the CPIs and the ISMs and the GDPs and the monetary policy stuff. And the question that we always get is, if I'm a technical analyst, do I take the fundies into account or do I ignore them? Meaning, when do I know when to stop trading? And I put out an excellent podcast if you want to check it out. It should be Trading Coach Podcast episode 617, titled Preparing to Trade the News. And it talks a little bit about the fact that, you got to use common sense. Even if you don't take news into your back testing, and I take zero news into account with my back testing, there are certain market environments, there are certain news events where the common sense approach is to stay out. And this week is a good example. As you look on the chart in front of you, seeing, especially what happened on Friday, a lot of the European pairs just fall off a cliff. Now, the problem is you're going to get a bunch of traders that were on the right side of that fall, and they're making money hand over fist, and they're bragging on social media. But no one's bragging about the people on the other side. It could easily be that. And if there's one thing about trading and investing in wealth creation, if you ask any wealthy person this, they are more concerned with keeping their money safe versus making a massive amount in a short period of time. So you may see people on the internet talking about, I made 50% because I was short the Euro Aussie and blah, 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 blah. Think about this. If you were on the other side, you might have blown an account. And is it worth it? Because blowing an account is all those years of hard work just gone out the window. That brings me to another topic as well. Another comment I got the other day was about a trader asking Akil, can I turn $20 into $200 or $2,000, I think, in a month? And that's them some really good conversation from our traders. But the cool thing about that was that the comments were really nice. The comments talked about, hey, shortcuts are gonna leave you broke, or shortcuts are gonna take longer than if you just did things the right way. How instead of trying to make a big sum at once, you should go for the slow, steady grind. And that's my philosophy in the markets as well. All right, many will look at February as a down month for me because my trade volume was low, but I was still able to make about 3%, or right under 3%. And that 2 to 3% range, that's the range that I like to be consistent with. So it's not fast, it's not flashy, it's pretty boring, but it's methodical, and that's what wealth creation really is. So I want to touch on those 2 topics first. Now let's head into the chart. We're gonna start. We got Aussie yen, pound Swiss, and Bitcoin today. Let's start with the Aussie yen. Aussie yen is an interesting opportunity. Do I have one drawn up already? I don't. We'll take the Aussie dollar chart. Let's go Aussie yen. We're going to be on the daily just kind of to avoid most of the noise that is happening here in the market. That's not a real pair. There we go. Nope. I'm having a brain fart. JPY. Gosh, JPY. I'm thinking dollar. JPY. There we go. So hop out to the daily, see what we have here. And we're seeing this on a handful of pairs. I just chose this one because this one's a little bit more interesting. But Aussie yen, you can see one of two things. One, price action is pushing up into a previous level of structure resistance. That's that big red box on your screen, the VS1 level. So that's a nice level to look for shorts anyway in this zone. Complementing that, we also have a potential advanced pattern formation. If I take this move right here, this swing high to swing low, that's going to be my X to A. Our move up right here is going to be my A to B. You can see we come to a 7, can't see it, but 70 something percent, 73% it looks like, which means that we are still in that range where it is a potential Gartley, not in that range where it becomes a potential butterfly. And again, there are strict rules for that. B to C is going to be my next retracement. And if we rally up to this level right here, 85, 80s, we are going to hit the completion point for a bearish Gartley or a potential bearish Gartley. You can see it's a deep one because of how deep that B retracement was. Now, if we want to add something to this, Bobby, I know you're looking and screaming at your chart right now. We also have a potential butterfly. Now, there's lots of ways to draw out butterflies. I'm not going to go through all the ways here, but essentially a butterfly pattern would look like this. If we take our B to C leg and this becomes our X to A of the smaller pattern, our starting point, this becomes our B leg, right? This is a deeper one. You can see it comes past the 618, past the 786, which is what qualifies for a butterfly pattern here. And then we're looking at a completion point a little bit below the Gartley completion. Again, it really depends on how you draw it. Just curious on where a Fibonacci inversion would be. 127, yeah, right, almost right where I drew it at, so right in that area. So you've got an area right here where you have a previous level of structure and you have two potential bearish patterns, and these ones are deep. So again, what I mean by deep is if you look at kind of the cryptographer deal here, the little pattern recognition software thing, right? It measures out your stop and your target, and you can see they are pretty far away, right? Usually with patterns, you're getting about a 1-to-1 if you're lucky, right? Because this one is so deep, you're getting much more than a 1-to-1, almost a 2-to-1 to target one, and that's using a 1 ATR stop here. So decent opportunity here on the Aussie yen daily. We're going to head to another pattern opportunity next. This one going to be on pound Swiss. And this one's similar, but a little bit different. Again, there are lots of pairs out there this week with these same setups, but I chose these two because of their location and the overall opportunity. Now, you can see here, pound Swiss, very similar. VS1 level, so level of support. So just invert it. Flip the Aussie yen upside down. Invert it, right? So we have a previous level of structure support at the bottom. We are almost at the lows. The pattern has actually already completed. I'll draw it in. This is going to be an X to A. Again, our swing low to swing high this time. A to B right here. B to C and a CD completion right down here. Right, you can see a little bit of a difference. The more shallow or the shallower B leg causes the shallower D leg here, where in the other one it was a little bit deeper. But regardless, we are in that zone and we've already passed the completion point. So basically you're getting, if you're looking to enter this off the pattern formation, you're getting a much better entry because your initial entry, if you were trading it, beforehand, would have been up here at 121.88. You're now down at 121.25. So you're getting about a 60 pip discount. And again, that's massive for your risk reward because again, it shrinks up that risk. Now, one other thing about this pattern as well, right? If we just take this support level at the bottom and draw a horizontal line there, we look left. This is a pretty decent mesh point in the market, right? If I kind of get my chart together, you'll see that this was a previous level of structure resistance. I don't know why I'm drawing the arrow. There's a big red box there. Right? Once that resistance was broken, it came down and became support. So a nice little structure swap, a nice little ice zone in the market. So even if you're not a pattern trader, if you're someone that's just looking for a structure-based trade in general, this is a pretty decent area to pay attention to because the market has clearly found this level of structure to be important before. So that's one of the reasons I like this pattern formation a little bit better than some of the other ones that are out there because it's not just a pattern trade, it's a structure trade as well. Bullish. Lastly, we're going to head over to Bitcoin, and this isn't a great trading idea, but it is the follow-up of one of the trading ideas we looked at in the weekly live streams. By the way, no weekly live streams this week. I know we've been getting the ball rolling. The momentum is great. Again, I am away for the week. and I am going to enjoy life instead of actively trading every day. So no weekly live streams this week, but we will be back the week after that. But you can see Bitcoin here, we're still in this consolidation. This was that little head and shoulders we looked at on the lower time frame, but we're coming back down to retest the previous level of structure, like a little fighting point right here. And again, we are in consolidation, but there's a little bit of a trend, right? Our lows have been getting higher. So if that trend continues, right, there is a chance that we can hold at this level. What makes me like this opportunity from a shorter term perspective, or I guess what makes it interesting, is two things, right? One, we can take our little horizontal volume deal here, draw it out from the swing low to swing high. You can see that we're right at that mesh point, right? We have our high level right here, and then we've got our second highest level right at this mesh point where we're finding trouble at. But if you look at how price action has reacted here, these are some pretty decent candles. We're actually seeing something similar on Ethereum. But you can see price action spiked down, right? This is the whole reading the candlestick thing. Spiked down and got rejected, right? So we saw some buying pressure right here. Tried it again, got rejected. We saw some buying pressure right here. Saw it again, got rejected. Saw some buying pressure right here. We did end up getting a green candle, not a higher high, higher close, which would have been a great sign, but another stalling type of candle. So this doesn't necessarily mean that the market is going to go up, but if I had to guess from this level, the buying pressure signs are outweighing the selling pressure signs. So if you do get something like a higher high, higher close, right, that would be a good confirmation that we're likely to go higher. Now, do I have a big long-term outlook on where Bitcoin is likely to go higher to? No, right? We got rejected at the last level of resistance, so I see no reason to cross this level. So this would be one of those deals where if you're looking for targets, I'd have a conservative level right here at this previous level of structure right here, and then a secondary level at the highs. I don't see anything to say that we're likely to go higher and break above this zone. But if you do, this is a perfect entry reason for you to do so. So thought Bitcoin was interesting. Again, not the greatest trading idea in the world, but perfect example for me to look at and really talk about in this video, the importance of reading a candlestick, because these leave clues, right? This is a major part of my trading philosophy. Obviously, structure is the backbone. There are other things I take into account as well. I do trade patterns. I do trade simple and advanced patterns. But at the core value of everything, right? Understanding how a candle moves, understanding the story that a candlestick gives me, and being able to decipher these small clues has led me to have massive edges in the market, and edges that I didn't have when I first started trading. So it's been a great addition. All right, hope you guys enjoyed the video. Hit that like button on your way out. Again, that's the best way you can support. I will see you next week. No, probably not next week. I'll still be coming off the road. But I'll see you next week in the live stream, which is probably not here with a Trading Edge video. All right, take care. You guys enjoy yourself. Be safe out there.